Thursday's market closes mixed in livestock. We were lower in the grain trade. Here to visit about that, Chip Nellinger with Blue Reef Agri-Marketing. And, it really felt like a money flow day. Outside markets seemed to be more influential than a lot of the fundamentals that we would normally trade, Chip.
Yeah, I think it has been here for a few days. Obviously, we've had a lot of shocks here recently. We had the bullish crop report from the USDA, but not much follow through to the upside, as we had just as big a shock with that CPI number and inflation running hotter than expected. And the stock market, the dollar reversed for sharply higher, stock market sharply lower, and these outside markets have kind of taken over more of an influence than the bullish USDA crop report from earlier this week.
So is that going to be the main influence here until we get to the FOMC meeting next week or not?
I think it'll continue to be. It's not like the outside markets haven't been an influence already. This strong dollar, I think, has been a bit of a headwind. The crude oil markets, on Thursday got beat up pretty badly as well. And I think that was something, especially on the bean side of the equation, it really held us back and kept some selling, especially on those intraday rallies into higher territory. I think the market, the speculators look over, see crude oil getting beat up, easy to sell the bean market. To answer your question, I guess in a long way, yes. Unfortunately, I think the outside markets continue to really, make this grain trade and livestock trade more volatile as we go into the end of the year. The Federal Reserve meeting next week's a real wild card.
Absolutely. Wheat probably had the biggest reversal down, and so with some of that as well, maybe just some profit taking there as we kind of maybe ran up into some resistance finally.
Yeah, I think it was. The dollar reversing off its lows earlier this week as that big CPI surprise print, really threw the market for a surprise in the financial markets. I think that strong dollar off the lows anyway, we're not back up to the recent highs. I think that's a headwind. And it unfortunately, it's just seems like the wheat market being the wheat market. It just has a tendency to really be a punishing, choppy market. We've had a recent rally, no follow through, and the market, falls out of bed. So again, I think it's just wheat being wheat, and the dollar maybe pressuring it a little bit.
Yeah. And I started off with wheat because it was down the hardest, and it seemed like that dragged the corn market down, although corn down for the third day in a row. And we couldn't take out the $7 mark, 2 tries at it. And so are the funds, kind of pulling back here now or what?
Well, I don't know if they're pulling back necessarily, but they're not as aggressive on the buy side. Yeah, they're waiting for the breaks to continue to add to their length instead of aggressively buying new highs like they would in the past. And I think that's largely because the outside markets there's been such massive swings. And as you look at some of these hedge funds, they trade equities, they trade bonds, they trade currencies, and along with our agricultural markets in a huge basket. And they've been beat up in some cases, especially on the stock side. So, they're not, I think they're maybe a little bit wounded, and they're not as aggressive as they normally would be. And we just haven't had that bullish daily news because we're at the wrong time of year with harvest starting to pick up steam here.
Yeah, I was going to say seasonal's working against us in both corn and soybeans. But to your point, when you don't have the funds pushing this thing, that's why soybeans have been unable to stay above $15 as well, right?
Yeah, exactly. And in the case of corn and beans both, we've had, historically strong basis levels, very unseasonably strong basis levels. So, if you're a producer out here and you're just at the beginning of harvest, and you're looking at these big overs in most areas of the country for corn and beans, it's not really a decision of, hey, should I commercially store this? Or should I store it on farm? Let's just sell it across the scale. I think you're seeing some of that, and that might be capping these rallies that we're seeing as well.
Absolutely. The cash market has been doing the work, that's for sure. What is your advice? Is it to sell as much as you can right now instead of store? Because is there any carry in the market to tell us otherwise?
There's very little carry, but it's a moving target, and it's a case-by-case scenario. So if you're sitting here with in the Eastern Corn Belt with very strong yield potential, the gross dollars per acre staring you in the face, you have to do something. But you have to, analyze each case, right? Earlier in the week, I heard some large processors paying like 60, 70 over for corn. They're near that for beans. They're giving drying and storage deals for corn. But that drops off quickly. As harvest picks up pace, you're going to have a lot of movement on that basis. So you almost have to analyze it day by day to see if it still makes sense. Okay. Depends on how wet your corn is. Depends on whether you're drying it or the elevator's drying it. There's a lot of moving parts there.
We did not seem to react positively to a possible rail deal, and we had exports out this morning as well. That seemed like there was just too much information for the market to really digest.
Lot of information. Yeah, absolutely. The export situation, I was hoping you weren't going to ask me because it was too much information for me. I don't know how to analyze that. It makes it more confusing because it was overlapping two crop years with the
Right.
end of one marketing year and the beginning of a new one. It looked like the bean number was pretty strong with China in there, for multiple weeks and fairly large purchases. Corn and wheat didn't look all that great, but it's hard to really get a feel because we've never really had that happen. And here's a month's worth of data at one time. I, for one, don't know how to read it, and I think the market took the same approach and not really knowing what it all meant.
Yeah, and it seems like grains kind of faded the rail deal too.
Yeah, I think that on Wednesday it seemed like the imminent strike from the rail workers maybe pressured us. Then you had the news overnight or early morning that maybe that had been averted, but you didn't see the bounce like you normally
No.
would have. So a little bit disappointing. It's not 100% done deal yet. They still have to vote on it and ratify it, but at least, which is a good thing. I mean, that would
Right.
have been a real mess at the start of harvest here.
Cattle trade, let's talk about that because we did have some steady to better cash trade, 142 even in the south. So was that the main driver of the up in live cattle?
Yeah, I think that was the main driver. I think the market took a sigh of relief that we kind of broke the trend of about 3 weeks, at least 3 weeks of lower cash trade, a steady to slightly better. I think that was a sigh of relief. And it seemed like the funds, although they haven't been wanting to be aggressive on the grain side, they've been pretty aggressive buyers in cattle, and they were strong buyers this week again on the hog side of the equation. So it was a really strong technical performance in the cattle market so far this week.
And the hogs even, for that matter. All right, thanks for joining us. Chip Nellinger with Blue Reef Agri-Marketing.